Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. And Ben Lichtenstein will take us through the charts. Here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Now, the first one, really, I'm glad you brought this to us because crypto has been all the talk, even today with Binance and everything that has gone on. And of course, Coinbase has had a recent run. Year to date, it's up about 76%. Tell me what you're thinking here about Coinbase. Scott.
Sure, Nicole, and thanks for having me. The stock over the last couple days with all the news, especially with Binance and some of the other negativity we've seen in the marketplace has gotten hammered. It's down right to some major support where there's a convergence of the 50 and the 200-day moving average here. And it's kind of settled in here just, even for just a short while. So what I'm looking at right here is that area being some support in the stock, even with the negative backdrop, if you will. So I'm not necessarily expecting a quick snapback, a quick rally back at all, but I really love the opportunity here to sell some very expensive premium for this week. Literally, this is a very short-term trade, very expensive premium, looking for the stock to really hold in this range. So what I'm able to do, what I'm doing here is I'm selling pretty much an at-the-money put spread this week, and I'm also selling a call spread that's up above to get even more credit. So I'm selling the 63.59 put spread, and I'm also selling the 68.72 call spread, both expiring this Friday. I can do that for like $2.50. Even if coin does break out, makes a huge move in either direction from here, the maximum that can go to is $4. So I'm collecting $250 to risk $150. I love this range, 60.5 to 70.5 by the end of the week. Those are my break-even points, and I think it's just a great opportunity to take advantage of some very overpriced options right now.
Yeah, so you feel like you're hedged here on both sides. Ben, tell us your thoughts when you take a look at this chart. I mean, the point is being made here that it's really evident the sell-off has been fast in the past few days.
Absolutely, Nicole, and the visuals I have today are going to provide a perfect backdrop for what Scott was just talking about in terms of the charts. Let's begin with the move lower that we've seen. Scott was talking about 60 to 70. That's the area of consolidation that we've been in over the last couple days. You can see how we are testing the lower extreme of, and I just want to point out how you guys know I look for these 2 phases of price development, right? And in this instance here today, Scott, I got to give you credit. These 3 stocks we're going to take a look at are really, they feed right into my wheelhouse in terms of what I look for. In the 3 instances today, and right now, coin specifically, high conviction to the downside on the hourly candles, sideways consolidation, and you're going to see that same pattern on the daily. I'll show you what Scott was talking about in terms of that confluence of the 200 and the 50-day moving average in just a second. But first and foremost, high conviction, sideways consolidation, no rejection of this lower level as of yet. But even within this bigger move lower, you can see this pattern repeat itself 3 times over, right? We've got it balancing around 84, high conviction, a vertical phase out of balance. Sideways consolidation, it's brief, but it happens around 70. You can see, again, these 2 phases playing out and developing. And to the untrained eye, this looks like another vertical phase out of balance to the downside and then sideways consolidation, right? But look, this low held above that low from Thursday. So again, no breakout there, just consolidation and value being formed again around 66. Stepping away from the hourly, I'm sorry, these are 15-minute candles. In the daily shows what I was talking about, that same pattern playing out. Sideways or conviction to the downside, consolidation, sideways, overlapping, more rotational price activity. And here you can see with the daily balances etched out here that, well, the pattern we just looked at over the last few days, this has been playing out since we're talking November of 2021. I've got 4 areas identified here. Remember, we were just talking about 69. That's the key area here as of recent. So 343, 263, 187, 69 is what we're trading around right now. Lastly, let me show you what Scott pointed out in terms of the 50, the 200-day moving average. This is a stock that's up 77% year-to-date. Nicole, you pointed out the significant year-to-date change, but here you can see holding on to the 50, holding on to the 200-day moving average. RSI, though, rolling over a bit after a failed attempt here recently up at that Feb high. So this one, again, I'm kind of giving more weight to the bears in this instance, as we have been and continue to be in a longer-term trend of the downside. Again, I see what Scott's talking about in terms of this range. There's opportunity opportunity within that, that's for sure, but still longer-term trend to the downside here.
I mean, it's sort of amazing how it's holding some of those ranges. And just like Bitcoin itself, even through the whole thing with FTX and look at Bitcoin, you know, when you look at it, 26, 27, 28,000, it really shows the resilience. Scott, I mean, what do you think about the resilience that we've seen of late, even with some of these headlines that are really somewhat detrimental?
Exactly, Nicole. That's the thing that is very surprising is there's so much overhang, there's so much negativity out there that, you know, crypto and quite frankly Coinbase are hanging in there. And one point to what Ben was saying, I agree with him. I agree that we are in a downward channel, but that's why I'm taking this position just for this week, not beyond, not a month from now, 2 months from now, and just again trying to take advantage of this very, very expensive premium.
Yeah, understood. All right, let's get to your next trade. That's around 275 today, and that is McDonald's. What are you thinking here?
All right, so McDonald's has made a run up to this area several times, 275, 276 area. And if it breaks through, there's a lot of room on the upside for this to run. However, I am looking at this resistance area right now to buy a very, very inexpensive downside position. Implied volatility option premium is very cheap right now, which gives me the opportunity to buy some downside and not really have to lay out a lot. So I am going out about 3 weeks, April 21st expiration, and I'm buying the 275 put. I'm selling the 265 put, $10 wide. That 265 target is kind of right in line with what the options are pricing in as an expected move going out to April 21st. And I can pay somewhere around 275, 280 for that. This one will be a quick one, though, because if it does break through on that upside, if it does get through that resistance, like I said, there's a lot of room for this to run. So this would be a quick hook for me on the upside if that resistance doesn't hold.
All right, thank you for that. What do you think, Ben, when you take a look at McDonald's?
Well, I think much like coin, this is a pattern that's playing out similar trend on the bigger picture daily as you're seeing on the hourly. And I think very similar situation. It looks like Scott's kind of playing the range. Here you can see the range that we've been in. And in this instance, in terms of MCD, you've got the uptrend and then this sideways consolidation, 282, the upper extreme. You can see the lower extreme around this 260 level. But you can see here, again, the two phases of development. On the left side of your screen, you got the higher highs, the higher lows, the initiative type phase. And then we find that stopping price and we get overlapping, rotational, sideways. And this is value farming. Basically, well, let's identify the areas here that we can see. It's pretty easily identifiable. First and foremost, 236, you can get the high conviction. I don't want to pull out a fine-tooth comb, but we could identify 2 or 3 more of these patterns that played out within this bigger picture move up. Sideways consolidation, currently forming balance around 272. So again, you've got the upper extreme, the lower extreme of this range. They're pretty well defined here, but this is just a 4-hour chart looking at the move we've seen since the beginning of October. Let's show how the trend that we just looked at really has been playing out since the pandemic lows we saw back in April, right? And as I take a look at this, you can see areas of consolidation, high conviction, similar patterns we saw on the hourly. I did pull out the fine-tooth comb on this one. 190, 220, 246, currently trading around this 272 again area, but McDonald's has done very well, you can see, for the longer term bulls. Now let's take a step back and just show you exactly what's going on as far as the 50, the 200-day moving average. I want to point out above and above both. Look at this, stocks up around 3%, but what's happening here in terms of RSI is encouraging, and Scott mentioned some room to the upside if we are to break out, taking out highs for the year for RSI, so maybe some room to go here in terms of price. Still some hurdles if the bulls want to take out that 281, 282 level, but I'd agree with Scott here. If we get through to the upside here, there's room to run, to say the least. This is a stock that's been trending to the upside, again, on the 4-hour we looked at since October, and on the longer term since the pandemic lows.
Look, you talk about the pandemic lows. We know that the consumer is back out and running around, and dollar has pulled back, so they don't have that multinational sort of headwind anymore. You know, Scott, final thoughts here on McDonald's.
Yeah, I mean, I agree totally with what Ben said, and that's why I said earlier that this would be a quick hook for me, a quick exit, if it does break out through here, because there's a lot of room on the upside. I'm literally just looking at this major resistance that's been in play here. If it holds, great. I see 265 pretty quickly. If not, I'm out.
Okay, got it. Last but not least, we're taking a look at Block. Now, this one has had some tough headlines, not necessarily pertaining to crypto, but of its own kind, a PR headwind. Now what with Block? Today we're seeing it actually gaining back about 1.25%, but your thoughts here?
Yeah, Nicole, I love scenarios like this in general where a report will come out, and this one happened to be headlined last week from Hindenburg about a big short. I think there's always opportunity when you see something like this come out and you get a big knee-jerk reaction. So what I'm looking at here in Coin is the report is out. Probably not going to be much follow-up for some period of time. And typically what you see happen then is a stock will, slowly maybe gravitate back towards middle of the range where it was prior to some sort of report like this. So I don't love it here at 65-ish as much as I did last Friday, around 60, 61 area. But there is a huge gap to fill up at 72 from where this was last week when this report came out. And I think, with the lack of any other, let's call it headline news to square about this report or Block, sorry about that, I think we're going to get to that 72, 72 and a half area. So I'm buying just a simple call spread to the upside. I'm buying, again, using April 21st options, about 3 weeks, the 65, 72 and a half call spread. I can do that for about $2.50. Great reward to risk. And again, I think without any more pressing headlines here, I think we get there pretty quickly.
Look, 72 and a half is not that far away from where it is right now, particularly when this has been a stock that was at almost 150. Ben, tell me your thoughts here.
Sounds like another range-bound play for Scott. I, again, am just excited the fact that we have a situation playing out where the intraday trend matches up with the longer-term trend. So this gives the more granular, the more tick-for-tick type trader something to look at, and then as well those that are playing this for a longer-term trade. You can see, again, high-conviction trade to the downside. We're just going back to basically a week ago when we were up around 78 down to 56, and I went ahead and identified these, again, areas of consolidation, the two separate phases. You can see 4 instances where we went and basically traded sideways, breakout to the downside, wash, rinse, repeat. We're talking, this is that big move Scott mentioned here in terms of the gap play through that $70 level. And since we have zero rejection after bottoming out around 56, look at this, overlapping, rotational, and holding a very well-defined range. This range is teetering around the $62 level. And taking a step back into the daily time frame from the 15-minute look, almost an identical pattern. And as I pull up the areas of consolidation that have formed, you can see we're going all the way back to the spring of last year, talking 140. Look at this, every $20 to the downside, down to 104, and then a big jump here down to this $75 range that we've kind of been around. You've got a well-defined upper extreme, lower extreme, we'll call it 50 to 90. Let's take one more step back. I want to show you, there's that gap Scott mentioned in terms of that run through 70 is what he's looking to get back up above here. But here you can see square, ticker symbol SQ, teetering around this, just below this 200-day moving average, well below the 50. But look, RSI is somewhat limited in terms of participation to the upside. So again, this is an instance where I can see what Scott's talking about in terms of opportunity within this range. But I think his shorter-term look at this one is the correct one because the longer-term play clearly to the downside.
Yeah, without a doubt. And so when we look at what's going on here, what are your final thoughts, Scott? Because this will also have some reaction to crypto headlines too, because you did have Coinbase. We've seen some of these other Bitcoin, Ethereum, MicroStrategy, Riot. These all sort of move together a little bit when it comes to any sort of crypto headline too.
They do, and that's why, Nicole, in this one I'm looking for Square or Block to just keep grinding or romping up back towards that gap fill area. I do agree with Ben, longer term channel. It is in a downward channel, but you know what, that gap area there's a lot to be said for that. And I am looking for it to fill there. And I think, this is a nice play to take advantage of that. But again, Nicole, with all of these strategies, all of them, I am 100% risk defined. So If I'm wrong, that's, I don't want to be wrong, but if I'm wrong, I know what my max risk is. I'm always capped out.
All right. Ben, he liked all your charts today. He saw where you were coming from. Thank you both very much. Scott Bauer, CEO of Prosper Trading Academy, and our own Ben Lichtenstein with a good look there at the big three today. We did Coinbase, McDonald's, and Block.